back. We're going over opening ranges. Now, what in the world are opening ranges, boy? You just keep bringing up all these stupid concepts from the ground, from the graveyard. Like, where in the world are you getting this? Are you just digging through ICT's concept, binge watching it? Oh, well, yeah, I am. I found a couple things. Found a couple artifacts or diamonds, I guess you would say. Opening ranges, okay, it's in the name. It's when price opens at a certain time. This can be London Open, stuff like that. But it's when price creates a range whenever it opens. That's really it. And you have three that I know so far. There might be more, but from when I was digging through ICT's videos, just learning, searching, doing all that, the three that I found were the London Open, the 930, aka Equities Open, or opening range, and then the PM session opening range, also known as New York close. You might call it PM session or afternoon session, but I call it New York close. So you have those three. You got the London opening range, the 930, aka Equities opening range, and then you have the New York close opening range, aka PM session. So those are the three so far. Okay, there might be more, like I said, and I will update this video if there is another one or two. But let's go ahead and look at the 930. We're going to start off with 930, okay? Since it's a very iconic time of the day. Very, very iconic, very, very known about, okay? 930 is like, uh-oh, 930, everybody has their alarm set for 930, and then the market just doo-doos the bed for no reason. All right, so the opening range, or any opening range, is used strictly for analyzation. It basically prepares the market. Like, for example, okay, now we do say accumulations prepare the market. We do say that. An Asian session is an accumulation, for example. But this prepares the market while the market is active, I guess you could say. I can't really explain it, but it prepares itself after it's been prepared, basically. So that's really what this is used for. It's not really used to make entries and stuff like that. It'll give you insight on your entries, yes, but this is mainly used to find liquidity, which is the high and low of the opening range, and then for analyzation purposes only, what price does within this area, okay? And there is another concept. It's a specific type of fair value gap, and it's called the first percent of fair value gap that goes with these opening ranges, but I'll talk about that in a totally separate video because that fair value gap is a lot of intricate and critical details that will probably make this video 40 minutes long. So we're going to go ahead and, just start. First, with the opening range, what you naturally will want to do is find the high and the low of the opening range, and that would be where's my little thing at? I don't think I have it on here, but if we want to draw a little box, it's from 930 to 10 right here to 10. So as you can clearly see, our highest high is right here, or if you really want to say highest high as in like an actual candlestick high, it'll be this, but the real high is right here. That's the high of the range. That's basically it. But I don't really know what he means because I watched it a couple times too, and I don't really know what he means by highest point of the opening range because that can either be a actual swing high or simply the high of the range. I really don't know. But just to keep it simple and not to complicate it, we're going to simply use this high here, which would be buy-side liquidity or buy-side liquidity of the top of the opening range, whatever you want to say. But then we have the low down here, the lowest low right here. Okay. Like I said, this is for analyzation purposes only. Now watch this. We're going to mark this as sell side liquidity. Now you see this move here. This move all the way back up. You see that? Yeah, I know you see it. Okay. Now watch this. Watch this. Just watch real quick. So, during that time, no, let's bring that back. Let me bring that back so you can know when that time is. So right here, I'll put like something like that. So in between this box right here, any candle in between this range, right along here, is the actual 930 opening range. So 930 kicks in, just dumps. It dumps the market. Okay, it doesn't even care. It dumps. Now, let's pay attention. Price, what is it doing up here? It's accumulating liquidity. But what is it also doing while it's accumulating liquidity? Coming into this reclaimed fair value gap multiple times. You don't know what that is yet because I haven't taught it to you yet, but you will in the future. A reclaimed fair value gap, if you want a quick explanation for it, it's simply when the narrative, it can be a temporary or a overall narrative, but when the narrative of price or temporary bias of price, whatever you want to say, It's basically a narrative on where price wants to go. It'll show it to you. But whatever the narrative is, if it's bearish, if we keep coming into this bearish reclaimed fair value gap or we run through it, right? It doesn't matter what we do to it. If the narrative has not panned out yet or the bias has not panned out, price will come back and refer to that fair value gap. Does it do it? Yep. 1, 2, and 3. And then on that third bounce, it just says, wee. See that? Very, very cool. Now, what does it do? It comes to the low of the opening range. Pay attention. Pay attention. Pay attention. Now, when it comes lower, does it go to anything? Does it really go to anything? Yeah, this gigantic imbalance from when Trump announced the tariffs reduction. Yeah, that gigantic higher time frame balance. Yeah, you want to highlight that? Sure, we can. Let's go to the hour and highlight that imbalance with some quadrant levels, shall we? Price comes down into the quadrant levels. Yeah. Guess what? Look, you see how close it comes to the equilibrium? Do I need to draw that out? Let me draw that out so you can see this. No, it's up here. See how close it comes to it? Guess what? It's like, nah, I don't want to go down there. Once you see something like this, it's like, oh wow, it's amazing. If price is really bullish, or you want it to be bullish, you don't want to see it go into the lower portion. You don't want to see that. Okay, you don't want to see that. You don't want to see it go down or below the equilibrium of a bullish fair value gap if price is bullish. Okay, just one thing we're going to mention there. But you see that, right? It comes down below the lower quadrant, close to the equilibrium, does not break the equilibrium, and even closes above the upper quadrant, showing its real bullishness. Okay, so now we're going to drop all the way down back to the 1 minute and look for that same 9:30 time, which is right here. Price comes down, purges the low, into that higher time frame fair value gap, comes close to the equilibrium, stops, time distorts, and remember, time distortion is a form of accumulation. It time distorts, then it rallies, disrespecting all these fair value gaps, creating some inversions, okay? Some inversions, because there's multiple fair value gaps here, as you can see. Price, after that, after rallying, it accumulates. Within what? These inversion fair value gaps right here. See that? There's a lot of them. There's a lot of them. You can pick and choose. You can pick and choose. But me personally, I would pick this one out right here. I think this would be mine right here. You can use any of them. But as you can see, every time price comes into it, except for this time, it respects it. And even when the bodies too, even when you look at the bodies, you see the bodies? Close. And it's even staying in the upper portion. Close above the upper portion. Close right here, upper portion. This comes down, but does the body close below it? Nope. Comes down again. Does it go below it? Do the bodies come below it? Yeah, the wicks come below it, but do the bodies? Nope. Comes below it again. Boom. So you see how influential this level is on price. Even all the other inversion fair value gaps here, it's still using it. And then what are we also doing? We are accumulating liquidity. Okay. And you're probably like, why is this man just analyzing? Are we supposed to? No. Did you not hear what I said earlier? Price, or not price, but opening ranges are meant for analyzation. They will aid you to see what price wants to do. They will really enhance what it'll enhance your overall narrative. Okay, the accuracy of your narrative. Okay, so we got accumulated liquidity up here, right along there with those two highs, and these highs right here. If you see that little, some people call it trendline liquidity, but I call it accumulated liquidity. Price comes up, respects that inversion, and goes pew. Pretty nice, isn't it? Now heading back to this rally, right? You might be like, oh, it created an inversion. No. It did. Yes, it did, but pay attention to this too. It disrespected it. That's one thing you got to consider, okay? Some people don't use this concept, the concept of disrespect, but it's very, very powerful, okay? And I can confirm that because I've been using it recently, just like seeing how price will treat other PD arrays. And ICT has even said this himself. He said sometimes you don't want to see PD arrays get respected, because that will aid you. You want to see price disrespect some things. You want to see price respect some things. You want to see price disrespect some things. If price is bearish, you want to see price disrespect all bullish supporting ideas. And if price is bullish, you want to see price disrespect all bearish supporting ideas. And does it do that? Yep. Disrespect is bullish for buy gap. Boom. Disrespect. Boom. Disrespect. Boom. Crazy, isn't it? Then guess what? You got this balanced price rate. Look at that. Balanced price range from in here. Let me see. Balanced price range from about here to here. Guess what? Guess what? See that equilibrium? Do I have to say anything, guys? Do I have to say anything? Do I gotta say anything? See that? See that equilibrium right there? Do I have to say anything? I don't think I do, because you can already see what's going on here. Boing, 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 boing. It can't get through it. And then we got all those disrespected gaps right here turning into inversions, not letting price go through it. Okay, it's not letting. Okay, no, I'm not gonna say that. I'm not gonna say that. Okay, I'll take that back. Just because it's there doesn't mean price has to respect it. It's not like a shield. Okay, it's based off how price wants to treat things. Okay, and it treats this inversion as support, and we can clearly see that in hindsight. It does it. Boing, 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 boing. Just there's a bunch of bounces. It doesn't go through it. Okay, it even with this balanced price range, and I will be reteaching balanced price range because there's been a lot of stuff that I've relearned and that have been misinterpreted. So you probably like, what the world? How did you even get that range? Like, what the world is that? How in the world do you get that? You will learn that in the future, but we can clearly see that price wants to go higher. From all this over here, it purging liquidity coming down to that higher time frame fair value gap, or really liquidity void, and then respecting the equilibrium and closing above the higher quadrant of it, or upper quadrant of it. And then we got this accumulated liquidity being rested here, and then in respect to the equilibrium of the balanced price range, then we got the liquidity price back here, then we got this inversion price gap being respected. All of that is confluence. And then what does price do? Whoa, it rallies. Well, guess what? And then it comes down again. It accumulates, right? See that? Accumulate, manipulate, expand, and just goes kaboom, and then it distributes. Amazing, isn't it? Yeah, no, it's truly amazing. Yeah, it really is amazing. It is. It's amazing. I'm stuttering trying to say that because this is how cool it is. Now, for example, you could have either held your position on this inversion for right gap if you took this, or you could have waited for the macro so it can break out of this consolidation. Oh wow, look at that! I didn't even notice that until now. Until I just literally said that. But in this range here, the 1150 to where's it at? 1150 to 1210 macro. It uses it to come out of it. You do notice that, right? It uses the macro, so like, okay, now let's get out of here. That is showing that price is very rigged. It's very algorithmic, very institutional, whatever you want to say, but I say very algorithmic in this case. Okay, institutional is like daily and weekly time frames. This is algorithmic, okay? This is algorithms doing this. Kicks in, and it says, whew. Now, for example, let's say we're like, okay, the macro kicked in. Let's do this. Let's go ahead and, get our entry. Let's go ahead and get our entry in. Say we saw this liquidity purge, respect of the equilibrium of the balanced price range. Price comes back up into this order block here with these consecutive down close candles. Highlight that. Highlight the, bring some quadrants on that. Comes below the equilibrium, but eventually comes back up and respects it. And closes above the equilibrium. Wait, hold on, my bad. But it closes above the lower quadrant, the equilibrium, and the upper quadrant. Okay, that's what it does. You do notice that, right? So for example, it's like we're gonna say that that was a little too close for comfort. It came a little too close to the equilibrium. Not even too close. It literally went below. We're gonna say like, nah, let's not take this. We're gonna wait. Price heads higher. And it's using that macro down here to leave this gigantic consolidation, as you can clearly see on screen. Once you see that range, you're like, okay, we're ready. Let's take this trade. We got an order block here. Guess what? Runs through it. But there is a mitigation right there. Price comes to the mitigation. That could be your entry. And then, as you see from there, kaboom. And then kaboom again. And then it keeps kabooming. And then keeps kabooming. A lot of kabooms, isn't it? Yeah, a lot of kabooming. Oh, wow. Whoa. See that? Whoa. Absolutely amazing. And then it stops dead in its tracks. Isn't that crazy? Yeah, I know, right? That's absolutely amazing. Comes to the high of the opening range, and then it just says, okay, no, we're done. Well, we'll wait till the final hour macro to do the rest of it. We can't right now, we're done. Alright, so let's go ahead and set our entry at that bullish mitigation right there. We're going to set it at the candle's low, because that will be the disrespect of the mitigation. Then we're going to drag our target. If we were eager, let's say we were eager, for example. Let's say we're really, really eager. Okay? We're going to do some standard deviations. From here to here, because that is the last swing of where our setup is, or where our PD rate is, or last swing. And then we deviate this higher. Oh, wow. See that 2.5? Where's it at? Right there. Isn't that amazing? Now let's draw that 2.5 out real quick. Watch this. Let's draw that 2.5 out real quick. Wow. See that? Do you see that? Do you really see that? That is precision. That is true precision. Isn't that amazing? So we're going to go ahead and drag our take profit. You can either drag it right here at these old highs right here that were being accumulated, because I did mention that there were highs being accumulated right here. So you can either target these, all this accumulated liquidity right here. You target that, which is around the 1 standard deviation, so that confirms that is a good target. So it's 1 standard deviation, which is already a 6 risk to reward. Or you can go for that 2.5, which is right above the opening range high, which gives you that insane 13 risk to reward. You're probably like, man, that's not real. There's no way. That can't be real. Oh, well, you just witnessed it. Well, about 13. But that's... You do see this, right? This is the power. This is the power of opening ranges. And matter of fact, just algorithmic concepts in general. ICT concepts in general. This is the power of it, okay? So that is the 930 opening range. Okay, now, that was our trade. Okay, we already got one win. Now, let's move over to the next opening range, which is 1:30 to 2 o'clock, which is the New York close range. New York close opening range. So we're going to highlight the 1:30, which is right here, all the way to 2. Really, that's it? That's really it? That's 30 minutes? Seriously? That does not look like 30 candles. I gotta see that for myself. Wait. Yep, that's 30 bars. Wow, that really does not look like 30 bars, but okay. That really it doesn't. It really doesn't. You can't tell me this doesn't look like 30 bars. But let's go ahead and highlight the high and low of our, opening range. The lowest low being this right here. It being close to this low here, creating relative equal lows, so it's supercharging this low down here, showing that there's a lot of liquidity resting there. Then we got the high. Right there, we got the high. As you know, we got this high over here, creating relative equal highs, showing that there's liquidity on both sides of the not dealing range, but of the opening range. Okay, so price may want to seek out, both sides because of this high over here, and then we got this lower here creating relative equal lows, and then relative equal highs. You get the point. First, price is like, nah, let's go up. Let's go up first. Mind you, we're still consolidating. We're consolidating while we're doing this. So just be careful, okay? Price goes up. We go up very slowly, where we're consolidating. Why? Because that final hour macro is about to kick in. That 315 to 345 is about to kick in. It's getting ready, okay? And then you got that last hour of trading where the algorithm is like, okay, no one's trading around here. We can do our work. No one is doing anything right now. First, price comes up into the buy side liquidity. Does not go through it. It shows the willingness of not going through it. And then, look at that. We go lower. This is the manipulation. Why do we call this manipulation? Because there's accumulation before that. Okay? This is all accumulation. Okay? We manipulate. We come back up to retrace into optimal trade entry. Then we got that 315 macro coming in. We go lower once again. That's our first stage. What is it? First stage accumulation? Yeah, first stage accumulation. Then we got our second stage accumulation coming back to this order block. And then we drop. That's the market maker model here. This entire thing is market maker model. So this would be original consolidation, or if it's really both are popping up here. You got power of 3 and you got the market maker buy model popping up here, because you got the original accumulation, original consolidation, then you got the sell side delivery with the first stage accumulation, then the second stage accumulation, and then it's correlating with that 315 to 345 final hour macro, and then price dumps again, coming into, I think, a discount of this range. I'm not sure. Nope, definitely not. No way, right? Wait, let me see. It might have did it. Let's see. I'm curious. Got close. I was thinking it did, but it got very close. But it came into a temporary discount. It basically went lower, okay? As you see here. Whoa. Whoa. Oh my god. That is crazy. Do you see that? What the world? How did you just... Yes, that's ICT for you. That's ICT Concepts for you. Just draw a random fair value gap from just nowhere. Out of nowhere, right? I mean, yeah, it's literally out of nowhere. It's just sitting here. But is there any other gap in sight except for this tiny one here? No. And then, like I said earlier, if price is bullish, it'll respect the lower portion. Did it go into that lower portion of the fair value gap or below the equilibrium of the fair value gap? Nope. So that's confirming what? It wants to go higher. And what does it do? Whoa, and whoa, and whoa, and just keeps going. Almost hitting that 21,000 psychological level. Very, very cool. Very, very cool. Almost hitting the 21 big figure. Now let's find our setup, shall we? Let's go ahead and find our setup, shall we? Now there is a lot of entries you could have taken here. Barely any really, but you got an immediate rebalance. You got this mitigation and this order block right here in the same area. There's a lot of things you could have took really. I don't know what I'm gonna pick, but I would say this mitigation is like the safest option because down here it's still a little risky because you know it got very close to that low, tempting to break it. But we created a failure swing and price headed back higher away from those lows, showing that we want to go higher. So we're gonna go ahead and take this mitigation block once again. You're starting to see how strong mitigation blocks are, aren't you? Yeah, they're very, very strong. So we got this mitigation. Price comes down into it, and we're like, okay, let's buy. Boom, we bought. We're going to set our stop loss candle low. And then we're going to deviate. We're going to deviate from, let's see, where's it at? From here to here. There we go. And then we're going to see where that lands. And I think the one is landing right above this high here. And yes, it is. That would be your target right there. So you can target that 1 standard deviation, dragging it all the way up, giving you about a 2.5 risk to reward. Now, this is just the 1 minute. I dropped lower into the 15 second. That's for the ones who are very, very eager to get that low risk, high reward entry. You can do that. Or if you want to stay on the not too wild, not too calm time frame, that would be the 1 minute. Okay, but you get your entry right here at the mitigation block. Price rallies, then you get that 2.5 risk to reward with that mitigation block entry once again. Okay, so now that's our second win. Very amazing, isn't it? Very, very, very amazing. Now we're going to go all the way back to the London opening range, which would be around wherever that time is, wherever 12 a.m. is. I'm trying to find that time. Wherever 12 a.m. is. Okay, here it is. So the London opening range is 12 to 12:30 a.m. Oh yeah, let me mention the times for that. So we're gonna go over the times again because I didn't say the AMs and PMs. But 9:30 opening range is 9:30 a.m. to 10 a.m. Then PM session or afternoon session or New York close opening range is 1:30 p.m. to 2 p.m. And then the London opening range is 12 a.m. to 12:30 a.m. Okay, those are the now the official times. Okay, you got that now. You got that. Okay, I had to say that before we got into this. So right here is the 12 a.m. Now I still cannot believe this is 30 candles. Like I really can't. I'm flabbergasted right now. So we got 1, 2 right there. So we got the lowest low being down here at this relative equal lows. Right there, the relative equal lows. Now I will say something real quick. The highest probability relative equal lows is when the swing after it, that's close to it, is a little bit above it. Okay, so we do have relative equal lows down here, but you see how close that leg is to that leg. You do see that, right? It's pretty close. This will make it high probability or a very, I guess, liquidated level, you could say, when this swing is just a tad bit higher or a little bit up here. That would make it high probability relative equal lows or relative liquidity, whatever you want to say. But you get the point. So that is the lowest low of our opening range. And then we got the highest high being right here. Okay. Wherever my buy side liquidity is. Okay, there we go. Now we're going to pull this down so you can know where the range is, which is right along here. Price immediately after the range closes seeks buy side. Okay. After that, it's barely moving. Okay, it's barely moving. Now, and I'm starting to think that the economic news events, not news events, but like the stuff that certain people say, like Trump says and stuff like that, Jerome Powell and stuff like that. I feel like it's all algorithmic because price barely did anything until Trump mentioned the reduction in tariffs. You do notice that, right? It did something up here, but around here, all this, no, it did anything. It did barely anything until right around 1:30, and then price was like, okay, let's go, let's go, let's go. And then Trump announced the tariffs, and it was like, oh, and then it said kaboom, and it was just a giant Jason Lover Drake candle, literally through the roof. Like the candle goes off my screen. Like watch how many times it takes for me to scroll down before it fits inside my screen. Watch this. 1, 2, 3. It takes 3 scroll downs for that to fit in my screen. If you want to zoom these candlesticks in down here, if you want to zoom these in, like around here, this is how many scroll ins it takes. 2, 3. Wow, still 3, but still that's insane. If you want to do 2 full ones, or 1 full, but you get the point. I'm starting to think this is stuff that people say, like in economics and all that, or whatever. But you get the point. I'm starting to think that speeches and all that, or just random announcements, I don't think they're random, because as we can see, price barely does anything. It prepares. It knows that something is about to be announced when it's supposedly random, but according to price, it doesn't really look random, as some people will call it. Oh, flash news, something like that. I don't think this was flash. This was very scheduled. Okay, but enough of me yapping. Let's go ahead and focus on this opening range. I'm sorry I had to go on that little rant, but it just baffles me to just see how price acts before an announcement, or not even before an announcement, but you get what I'm saying. Just a past price action, before an announcement. But let's go ahead and get into this. Price comes up into the buy side liquidity. What does it do? Consolidate, 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 consolidate. Keeps coming down to these lows, but it doesn't break them. You remember what I said before? If price is consistently breaking highs and not breaking lows, what is it? Bullish. Bullish what? Institutional order flow. Wow. Crazy, isn't it? Guess what? We come down into these internal range, relative equal lows. Boom. We come below that. Amazing, isn't it? So we got accumulation, manipulation, then we got expansion. Okay? We got expansion, then we got the retracement, filling this fair value gap back into what? This order block here. This order block right along there. And then I think we have a mitigation. Yeah, we do. We have a mitigation right along here too. So we got order block and a mitigation right next to each other. Price comes below the order block's equilibrium, which is kind of dangerous, but there's a mitigation block here which is stronger than the order block. So if price disrespects this mitigation block, which is stronger or has a high level of importance than the order block, it's like, okay, we're not going to take this trade whatsoever. But price comes all the way down, disrespects the order block into the mitigation block, and respects this. Like, oh wow, it's really respecting this. And live it'll look something like this. You'll see price coming down, or you see price going boing, 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 boing. Like within these candles right here, that's what you will see. It'll go boing, 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 boing. Might go a little lower, boing, 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 boing. And then it'll just come all the way up in reverse. And that's what happened here. Okay, this is with live price action. That's what you will see with live price action. It'll like go boing, 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 showing that it does not want to go through it. And then the candle will flip, and then just go kaboom as it does right along here. So we take our entry at that mitigation block. Again, that's our third mitigation block entry, which is kind of insane. And we can set it at the low of the order block, since it hasn't really ran through it, but it just ran through the equilibrium, showing a sign of a disrespect of the order block, or I guess you could say invalidation of the order block. But the order block is still valid because it wasn't disrespected. It wasn't ran through. You get what I'm saying? This mitigation block basically saved it. This mitigation block right here, it saved the order block. So we can safely put our stop loss at the bottom of the order block, keeping us safe. So we're going to go ahead and deviate this range higher and see if we can get, you know, any good target. Let me delete this real quick. All right, so we're going to deviate this range higher right here. See if we can get anything. And, oh, yep. First standard deviation lands right above this high here, confirming that that first standard deviation is a good target. And then that's where we can set or take profit right there, giving you that 5.25 or 5.25 risk to reward. And that is your midnight trade if you trade at this time. Okay, I'm just saying, for example, if you was to trade at this time and you trade every opening range or whatever, then this would be your trade. Okay, I'm just saying how you can use these to aid you. Okay, because remember, these are for analyzation purposes only. But this recording is about 31 minutes. Jesus Christ, wow. I said without the first presented fair value gaps. Well, with the first presented fair value gaps, it would be over 40 minutes. But without it, it's 31 minutes. Well, I'm guessing because we went over each opening range and we took a trade within each opening range. But it's still 31 minutes, maybe 32 if I keep talking. But anyways, this is the end of the recording or the end of opening ranges. And I'll see you guys in the next one. Good luck and good trading.